In today's Deals Report, Centerview Partners co-founder Blair Effron spoke exclusively with our senior deals reporter Ed Hammond about how much CEOs value certainty and why he has no plans to take his company public anytime soon. Take a listen.
Stable, certain backdrop always leads to longer-term decision-making, always leads to longer-term investment. Would that help the economy here and help a wider part of our population? Of course it would. So while I say that CEOs are good at operating against uncertainty, we all value certainty at a premium, and we should.
All right, let's zoom in on Centerview and what you guys are doing now. Look, the obvious question, you run a successful, profitable, growing investment bank. Why not IPO?
You have to have a reason to go public, and the reason has to be beyond simply what happens to a group of senior people on day one. For us, being private lets us invest in the business for the long term, lets us invest in our people, lets us expand, lets us develop a culture that really is focused on our clients and focused on the longer term and building our business. And I think we have a responsibility to do that. So the fact is, we have done just fine staying private. I think it gives us a level of flexibility that we would not have in the public markets. And the only reason a company should be going public, I think, is because there's a business need beyond just wealth creation.
Well, isn't that, I was going to say, isn't part of that business need that it allows you scale? I mean, as you say, look, it's axiomatic for any company going public. You lose control to some extent of your ownership, but you get liquidity, you get the ability to grow into new areas.
So we are growing fine. Okay, we had, we'll end up this year well ahead of last year. Our productivity, as measured by revenue per partner, revenue per professional, as high as ever. It's not stopping us from investing in the business. And your point about decision making, we like to make our own decisions because we think we understand our business better than anybody from the outside.
Talk to me about the issue, the ever-present issue, if you like, of key man risk. You know, you and Robert Pruzan founded this firm 15, 16 years ago. You're both still there. You're both still relatively young guys, but at some point you may want to do something
relatively young.
different with your life. How do you manage that transition, and how does the firm that is obviously so closely tied to you two survive?
I would tell you this. I think that is at this point, an unfair misperception about the firm. Fact is, we have more than 50 partners. As I said, our revenue per partner professional is higher than ever. You couldn't do that if any firm depended on a few people. There's a reason nobody's name is on the door. Fundamentally, it's a partnership. We run it that way. I love the idea that our business is diverse by sector. I love that it's diverse by geography. And my sense is any business like ours measures itself on I do anyway, one metric. Am I less relevant in December than I was the previous January? That's how you know you're institutionalizing something. And I can tell you that this year, like preceding years, we are, Robert and I, much less relevant than we've ever been.
What's the best thing about running an investment bank?
Great people. We have great people through the ranks, energetic, smart, want to develop great careers, and it's just a lot of fun working with them.
Okay, let's just wrap on this. It's a time of year where obviously a lot of people in your industry are focused on league tables. A lot of people want to be at or near the top of those league tables. Everyone always claims that they are number one, which sort of gives rise to the idea that the whole thing is a fallacy to begin with. Why do bankers spend so much time worrying about league tables?
The answer is we don't. Okay.
I knew you were going to say that.
Well, you set me up. All right. What we focus on is helping clients with their most complex matters. Obviously, we do a lot of the biggest things out there. We do a lot of the things that you've never heard of. We happen to have a good league table ranking like we do every year. That is an output of what we do as the input. Good work. We're not a firm that is public, so we don't need to report to our investors that we're 1, 2, or 3. We don't need to talk about share. And I think it's a bad way to run a business.
But for the bigger banks, some of which you have worked at?
It doesn't make any sense to me that they focus on this, because I fundamentally think that too often they lose sight of resource allocation, where to have the highest impact, because they're so focused on just getting the league table credit on situation X versus if they focus on situation Y, they might end up in a better place.